So in this episode, I know a lot of you guys have been asking me, Shashank, how do you plan your swing trading strategies and all of that? So before I get into very complicated stuff, let me explain a simple concept for you. By the way, this concept has become very famous in US, right? So US market, a lot of people are doing this, and this concept is called IPO basis. How do you play IPO basis? So today I'm going to show you how do you scan companies very easily for IPO basis. What is the strategy behind IPO basis? What are the entry and exit parameters for IPO basis? And we will look at 4 to 5 different examples of IPO basis. Now, please understand, nothing in this video is a buy or sell recommendation, but let us go and have some fun. Now, guys, before we get into the video, there is a very new thing that Grow has launched, which is called Grow Nifty India Internet ETF Fund of Fund Direct Growth. This is crazy because I'll tell you what this basically does, right? So the launch date of this fund is 13 June 2025. The ending date is 27 June 2025, and allotment date is 4th July for where you can start. This is a new fund that is coming out in the market, and what they do is they invest in internet companies, or as you know, as platform companies. For example, you have these internet companies in the market like Swiggy or IRCTC or Zomato, and you know that the internet companies are going to be the future and it's going to grow quite aggressively. In fact, if you look at our entire population, because we have all become internet savvy with our phones, most of us are using these platforms and engaging with these platforms, right? So as you know that most of this is happening in this perspective, and even the Nifty India Internet Index has given a crazy return in the last few years as well. So I want all of you guys to definitely go check this out. In fact, if you look at the constituents of this index, you will see some of the interesting companies here. For example, Angel One has 5% weightage on this index. Zomato has around 20% weightage on this index. We have Info Edge. We have companies like Motilal Oswal. All these platform new age internet companies. 197, which is Paytm. PB Fintech, which is your Policy Bazaar. Swiggy, Thomas Cook, all of these companies are there, Ixigo, and these are some very, very, very good and interesting companies that you should definitely look at. This is a new fund that is coming out, right? And I'm going to share the information in the description as well. You can check it out with all the other information like what is the expense ratio, what is the fund dates, all of that will be shared with you guys below as well, right? But this is very interesting. It is an open-ended fund, right? The minimum investment in this fund is 500 rupees, and it is a long-term objective where you invest for long-term capital gain appreciation, right? So if you want to know more about this, definitely go check this out. And now let us get back into our video. First things first, let me give you one example of what an IPO base is and why IPO bases are usually created. Now I'll just give you an example. This is a company called Acme Solar that got listed. Usually you will see a very similar trend in all of these IPO based companies. They will list, okay, they will go up a little bit, then they will have deep selling, then they will create a U pattern like this, and they will come back to their all-time high, and that is the base that it is creating. And once it breaks the all-time high, it starts going up really well. Now, why does this phenomenon occur, right? Why does this phenomenon occur? Because most of the IPOs today are overvalued when they come out. So that is why you will see massive selling coming in. After that, you have that anchor lock-in, 30-day, 60-day, 90-day anchor lock-in. So when that happens, you will see suddenly a lot of selling will come in. And once the base is created, in 3 months, the company comes out with the result. Usually the result is good. And then you will see the company starting to make its upward move again. But until and unless it doesn't break its base, people don't consider it as a very good swing trading opportunity. Why? Because all the people who had bought here are still stuck. So they will also put nice selling pressure when the price comes to this range as well. And I will show you some live examples. For example, let me show you one example of another company, Ventive Hospitality, right? Look at this. Again, it is creating a base, not moving too much. ITC Hospital, look at this. Created a base here, right? ITC, not hospital, my bad. ITC Hotel. It came out at an IPO, did not move, stayed here, stayed here, waited for the base to break out. Here, volume also came in, breakout also happened. And then from there, just look at the journey of this company, right? After that, just look at the journey of this company. From there, it went from 179 to almost currently trading at 212, and it will continue to go up, right? Again, another company that is creating an IPO base. See this, very close. But before I go deep into it, let me explain how these things basically work, and let me make you understand how these actual things actually work, right? So first things first, how do we scan these companies, right? Because if I don't know how to scan these companies, no point at all. So there are two options to do this. One is there on charting. there is a person called Finally Nitin, who's a very great guy in the entire investing space. So he has a free dashboard called IPO 365. You can go search it as well. IPO 365 at Finally Nitin. This is very interesting because here it has all the IPO companies, right? If I go from one, you will see all the IPO companies in the last 1 year, last 365 days. You will see all the IPO companies here. Now, what we have to do, slightly manual process is there, where you have to go and check out all these companies. What are some companies that are creating a base, and keep an alert for that base to go up, right? So I have two options. One, you can, there are some tools online where you can just search copy to trading view, and you can go put this on trading view, like how I have done here. Let's say IPO trenders, and then you can go quickly like this, just scroll one by one, one by one, one by one. You can see all of this, right? Or you can also start putting it into a proper watch list here, and start going through that watch list as well, one by one, and keep a trigger and keep an alert for it, right? For example, some of the companies are here. I will show you some companies, but if I had to scan very quickly on, let's say, trading view here, look at this. Let me just do this like this. So Acme Solar, I'll just go and put an alert over here, right? Just add an alert here and sit down. Afcons, no IPO base, nothing here, nothing here. So you can go fast. Look at this company, Arcade, right? Just gave out an IPO base here, right? This was the IPO base, just broke out. So now it is very interesting for me to look at how far this will go ahead from this point, right? Here, nothing, nothing. Here obviously it broke the base and just went flying after that, creating the base. So you can see all these are all the companies that are there, and you will also see there are a lot of companies that just break out from the base and go, like look at this company, now just gave a breakout, right? So this is a very, very, very deep strategy where a lot of people use this strategy to understand how to invest in IPO based companies and ride the profits for a long period of time. See here again, base was created here, and the profits have been riding on top, right? This also recently gave out a breakout as well, and you will see here another classic example of one source specialty pharma. Now let me show you how to play this game properly. Again, I don't want to waste too much time, but I will teach you simple concepts fast, right? First, two things you have to do: go to indicators and put EMA, okay, which is moving average exponential, and put a 20 moving average and 50 moving average. So you go to inputs here and change the 9 to 20, right? And then change this also to 50, right? You can actually keep the smoothing line as EMA itself instead of SMA. Let me just change that and do this, right? Now you will see these two lines have come, the blue line and the red line. Now the blue line is nothing but the 20-day moving average, and the red line is a 50-day moving average. We will be using 20-day moving average as our base here. Now we will automatically see that this IPO came, as you know, it always goes down and then it creates a base, comes up, but we will not invest here because it can be a bad thing. So we will wait for the base to break out. Where did the base break out? The base break out here, which is the all-time high breakout over here, right? As soon as the base broke out, you will automatically see that all the buyers, all the sellers here have been absorbed completely, and all the buyers have suddenly kicked in here. Now we will take a fresh position here, and then we will trail it on the 20-day moving average, right? So only if it breaks below the 20-day moving average, we will take an exit, and we will ride it as much as we can as it keeps going up. So as you can see here, it has not broken the 20-day moving average and it's growing. But as and when it starts breaking the 20-day moving average, you can take a, not a full exit, you can take a small exit. So let's say you have invested 100 rupees here, and it has gone up, gone up, gone up, and somewhere over here it breaks your moving average and falls down. You can take out 30% of your investment here and book the profit, right? And wait for the 50-day moving average. If it breaks the 50-day moving average, fully exit. Because most of the time what happens, the company will come here, take a pullback, and then start going back up again. And we've seen this with a lot of IPO companies. They do this where they fall down, take a break, and then come back up again, right? So let me show you some examples. For example, look at Vishal Megamart. Okay, Vishal Megamart, similar problems. It did the base here, it broke out, but then immediately it went up and then it crashed down, and here only exit got triggered. So it did not create a base. Also, it is always ideal for a company to create a proper base like this, right? Now, if you see the base here, actual base has got created over here, where you can see the U-shaped pattern of the base, and this is where the proper base has been created. But the breakout has not happened yet, and it is still struggling at the base because a lot of selling pressure is still currently there at this base. Only once it breaks out from this base, we will have a good opportunity. Now, I will also tell you towards the end what are some other rules that you should follow, but let's look at some more examples, right? Look at this, Sanatan Textiles. I think it's a small company, 3,000 crores, very classic example. IPO came out, went down, created a base, broke out from the IPO, right? Trailed on the 50-day moving average, and you can see here it broke the 50-day moving average decisively here, because on this day it did not close below the moving average. It was closed above only. right? Here also it closed above, here also it closed above, whereas I would exit here. So you take a base here, your profit would be from here to here, you take a small exit. You will not exit the entire amount, as I said, 30%, and you will continue to trail it on this 200-day moving average and continue it going forward. This is a small way where you can take some profits as well. Same, look at this arcade which we saw there. The IPO base is here. It has created a base. Right now it is still at the base, so we're going to see what we can do here. But it is at the no profit no loss zone here, right? Coming to Ixigo, creating the base. Transrail, creating the base. Vari Energy, still trying to create the base, and all of these companies are in that similar zone. Whereas ITC Hotels, you can see here, finished creating the base, and you follow here. But see now ITC Hotels, how this would have actually played out because of this one day. Now here are some other rules that will come into the market. According to the rule, IPO base, you take an entry here, it's gone up a lot, right? And it trails along. But the minute it broke this and closed below this over on this day, you will take a 20-30% profit book here, right? 20 or 30, up to you. You can take a 20-30% profit book. So you made a small profit. You entered at, let's say, 180, you exited at 195. Not bad, not bad. Almost a 10% gain that you have taken an exit. And then you will wait. And then it again came here, and then the next day it has not broken the 50-day moving average. The next day it went here. Now this was the Indo Park day. So one rule is that whenever a big event, something like this happens, give it some time and wait, because it is not a fundamental event, it is a technical event, right? Something happened in the world, and that is why the market fell down, and that is why a lot of people had a problem. Usually it recovers very fast, and as you know, it does recover very fast. So if you ignore this day, the one anomaly day of Indo Park you ignore, you will always see that the trend remains, and you have already booked 30% profit, so you're not going to be in a significant loss, and you're going to trail your profits here until it breaks the 50-day moving average decisively. Until that comes up, you are not going to break it properly, right? So this is something that you will continue trailing over a long period of time. Now let me show you some more examples here, right? NTPC green, still not moving, and you have to keep alerts. If you just keep alerts, it becomes very easy for you to actually target it, right? Let me go down faster. Look at this, Quality Power Electric, again very beautiful, right? Quality Power, right? Small company, absolutely same logic. IPO came out, obviously selling happened, base got created, alert is set over here, alert gets triggered here, your buy position comes in somewhere here, and now you wait until it breaks the 20-day moving average. Till now it has not broken 20-day moving average. What is my profit on this trade? As of now, what is the profit moving? Let's check. This is fib, this is long position. Assuming you took a long position here, right now the profit is still running at 32% in the last 1 month, and your trailing stop loss can actually become zero, because as you know, this has gone up so much. If you want, as a rule, we say that it should break the 20-day moving average, but if you feel sometimes that it has gone beyond your understanding and you feel that the risk reward ratio is good, Shashank, I don't want to be too greedy and I'm happy to take the exit, you can take the exit then and there itself. You don't have to worry too much about it, right? Usually what people do is they do get little greedy sometimes and they try to wait. But if you feel with your gut feeling that yes, Shashank, it has gone a bit overvalued and I think I should not do it, then I think you can take an exit as well, right? So again, I've shown you how to get these companies. This is another company. No, this is not doing well. Again, another very interesting company that I'll show you, which is also coming up in the same way. Another company called Unimec. See this. Base is base is done, got created, upward movement has come, but it is not ready yet. But you can set an alert here and keep that alert ready at this point and say that whenever this breaks it, I will wait and then I can initiate a position. Now coming to some rules, how much position can you invest? Let's say I have my entire swing trading portfolio. Entire swing trading portfolio is 100 rupees. Your position in each of these trades will not be more than 10% of your entire account. So if I have 1 lakh rupees that I'm using, I will take a position of 10,000 rupees per trade and not more than 10,000. Why? Because if I take more, then I'm just getting greedy and I will go into a big problem. 10,000 rupees or 10% of the account goes into one trade. After that, when the trade breaks the 20-day moving average, you exit 30% of that. So out of 100 rupees, you remove, let's say you bought 100 stocks, you will remove 20 to 30 stocks. You will not remove percentage of gains, you will remove percentage of stocks. That means you're also booking some gains out. So 30% of the stocks or 20% of the stocks you exit, remaining 70% of the stocks you will ride until it breaks the 50-day moving average. See, if the stock is in a negative trend, it will break your 50-day moving average within 2 days. So you're not going to lose a lot of money. But for example, it is doing a reversal trend, then it will go on for a very long period of time and you will not lose any money. So think about it that way. Again, these are swing trading positions. The risk reward ratio over here is slightly favorable, and if you get anywhere between 5 to 6%, you should consider yourself lucky and do not be greedy in this. The whole game about IPO base is don't be greedy. The minute you get greedy, you will lose here, right? What I do is 5-7%. Sometimes I feel market is choppy. I will take that 5-6% full profit and go home. Chalega, after tax 4% profit. I will take that 4% profit and go, because I'm doing this with 10 different companies, and one or two will, like quality power, will fly. Some of them will not fly. And you have to wait. You have to wait 1 or 2 weeks or 3 weeks or 4 weeks. But if you can wait for 1, 2, 3, 4 weeks and suddenly you get 10% profits or 15% profits, that's great. And now also please understand, not all trades will do well. As you saw, one trade went up and crashed down immediately, so you will take a loss. The loss might be 2%, 3%, 4%, 5%, right? But do not take more than 5%, or actually not even 5 is also too much, but do not take more than 5%, because if you invest at the base, there's very less chance that it will break the base again. But if it breaks the base and stays below it, then you have to sell it either which way. Got it? So there are some rules to this, there are ways to this. If you have any doubts, any questions, put in the comment section below. And guys, please, I know a lot of people don't subscribe to this channel. We're trying to grow the channel as well. So please click on that subscribe button and also on the like. And if you have any doubts, any questions, let me know. And if you like these swing trading strategies, I can get more experts on the channel who will discuss swing trading, and that will help you in your journey as well. This is me, Shashank Udupa, signing off, guys. Take care. See you guys. Bye bye.